Hello, welcome back to AusBiz as we get across the global view on this Wednesday. I'm Andrew Gagan, good to have you with us. All right, so let's check what did happen overnight. Equities mostly higher on softer than expected US inflation data, while gold and oil gained and the US dollar fell. On Wall Street, the S&P 500 and Nasdaq added to their recent rally after the trade deal between the US and China continued to boost risk sentiment. It led some analysts to upgrade the S&P's targets and lower their odds of a US recession. Semiconductor shares gained on hopes for a data center push into the Middle East, backed by President Trump, who's in Saudi Arabia. That saw Nvidia jump higher. Shares of Boeing rose as the US and Saudi Arabia signed an economic partnership deal, with the Saudis committing to defense sales agreement worth nearly $142 billion. Among the top S&P gainers were Supermicro Computer and Palantir Technologies, while shares of the health insurers were among the worst performers, with United Health falling to a 4-year low after it suspended its forecast, citing higher than expected medical costs, which dragged peers CVS Health, Humana and Elevance lower. And crypto exchange operator Coinbase Global surging after announcing that it will join the S&P 500 next week. Well, US consumer prices rebounded moderately in April, up 0.2%, as declining food costs partially offset rising rents, leading to the smallest annual increase in 4 years. In the 12 months through to April, the CPI climbed 2.3%, while core CPI increased 2.8% year on year. However, inflationary pressure is expected to persist even as the US-China trade deal made over the weekend, with the Trump administration agreeing to slash duties on Chinese goods to 30% for the next 90 days, while tariffs on US goods into China are down to 10%. Well, US Treasury yields rose on lower than expected inflation data, overshadowing expectations that tariffs will fuel higher prices and reinforce bets that the Fed will take its time resuming its easing cycle. The US 10-year is at 4.47%, the 2-year up to 4.02%. And the US dollar index has fallen at 0.8% on the inflation data. The Aussie trading at 64.8 US cents, and Bitcoin climbing back above 104,000 US dollars. Crude oil futures have climbed, buoyed by the temporary cut in US-China tariffs, which is seen as improving the outlook for global demand. Brent crude futures up 2.5% at $66 a barrel. Copper rose more than 2%. Iron ore falling slightly to 101 US dollars a tonne, and the gold price has rebounded on bargain hunting after a sharp loss in the previous session. Spot gold up almost 0.5% at $3,247 an ounce. Well, let's get across what we're seeing at a macro level, particularly in the US. How's it playing out, particularly for equities? John Blank joining us from Zacks Investment Research. John, good to have you back on the show. Let's begin with that inflation data. Was that a little unexpected? Because surely you're beginning to see the effects of those tariffs come through on those goods imported into the US.
Yeah, Andrew, we didn't see anything from the direct import tariffs. So we did see through the gasoline channel, which is basically to the oil prices and the slowdown in global growth that was telegraphed. We did see a fall down in gas prices with 12% year on year annualized. And then we had a 2% food at home number year on year, which is probably the most surprising thing, which ran totally counter to the import tariffing, is that, price of eggs and 5 or 6 other main staple commodities actually declined in this month. So I think it was just more of a domestic readjustment towards more supply in a lot of food commodities, perhaps as a weather event, I would think, that played out in the broad CPI, not the core. As you mentioned earlier in the show, 4% annualized shelter costs are keeping the core CPI at 2.8. So it really is, the traditional case of volatility in food and energy, and both were striking, a positive note this month.
What are the expectations, though, of inflation going forward, given, despite the fact that those tariffs have been pulled right back between the US and China? The Chinese goods, it's still sitting at 30%. I guess you could say 40% if you include that original 10. What effect is that going to have?
Yeah, Andrew, the only way to think about this is to say that per capita income in the United States is $82,000. And to say that the Yale Budget Lab has computed after Monday, so after the readjustment of the Chinese-U.S. tariffs, to a $2,800 per person cost on the tariffs. So what that tells you is that, the average person is going to get a hit of 3 to 5% on, costs that are passing through the tariffs to them personally. So is that big enough for a massive surge in inflation or a step back in retail sales, all those sorts of things? We will find out, Andrew. I personally think it's probably more of a slowdown in the recession, and I think that's kind of what the probabilities are falling back to. And we're probably going to lose 0.8% growth out of what that number represents.
John, meanwhile, Donald Trump doing deals as he does, and he's in Saudi Arabia at the moment, as I mentioned there. So obviously talking up the deals that he's done already in the billions, clearly looking to favour tech in terms of data centre investment, defence spending, energy at the same time.
Yeah, that's it, Andrew. I mean, we'll do that. I'm sure we'll talk about some stocks today. And every time I look at tech, particularly, I get, second quarter earnings estimate rising quite dramatically, and the full year outlooks rising dramatically. So in the midst of all of the, chatter and the uncertainty and the volatility in the market and in the news media, the actual tech sector is kind of continuing, a more secular story of the AI boom. And we saw that with the news in Saudi Arabia. And this is playing way out beyond just with Nvidia. I mean, super microcomputer, which provides the server racks and farms, a lot of the sensors and connectors, a lot of the coaxial cables, the fiber optic groups. It's still moving ahead. So I think that's the other subtext is, we have a hard time decoupling from the news cycle, which is being managed explicitly in a populist way, and the fact that the tech economy particularly is secularly continuing to rise and support the overall macroeconomy more than people realize.
Overall, given what you're seeing, John, have you been surprised by that equity market optimism that we've seen, particularly in light of that latest deal, given that there's still nothing solid there and there are tariffs that remain?
Andrew, the only thing I can do to put numbers around this and make it more quantitative and as an exercise is back in early February, the VIX volatility index, option volatility, was at 15. And on April the 8th, we went up to a 52 when all of the whole range of dire and high and absurd tariffs came out. So then we've just been walking down the volatility, which is raising the stocks back up again. And now we're at an 18 VIX, which means we're still 3 points from the February, base. So what I would tell you right now, as we're talking on May the 13th, is we probably have another week to get down to that 15 VIX volatility, probably a little more rallying with a lot less volatility and a lot less lift. And we probably are going to get up to the S&P, 6,000 level and basically wash out this volatility. So I think the trade policy uncertainty, the populist media uncertainty, and the VIX volatility index are kind of, triplets in a story of how this whole plays out across those different, sectors of participation.
Well, John, let's get to what you're seeing in terms of opportunity, equity-wise at least. Again, you've brought 3 stocks to us, the first one being Amphenol. So not one I'm overly familiar with, but what it's electrical connectors and the like, also exposure, obviously OS. Just wondering if there's subject to tariffs at the same time.
Yeah, ticker APH, Andrew. It's actually a 90-year-old company. It started in Chicago. It's based in Connecticut. It's got some operations down in Texas. And it's got 125,000 employees. So this is one of these under-the-radar things. In terms of sensors and connectors and coaxial cables and fiber optics, this group has been slowly M&Aing their way up into a very big position. Now they got $15 billion a year in revenue. So right now we've got a target price at 92, and I got it trading at 85 today. It's just been crazy what this stock's been doing, though, Andrew. It's went down to 60 back a month ago, and now we're back at 85. So it's just exhibit A of this idea that basically people were thinking the growth is gone, and then as soon as this trade volatility got out of the way, it bounced back. But what I will tell you underneath that is totally consistent with what we're seeing in the tech sector is estimate revisions for this year are up 13% annually. And for next year, 11% annually just over the last 60 days. So just soak that in, Andrew. For the last 60 days, in the midst of all of what we've been seeing in the news, this particular company has been raising its earnings 12% and 11% annually.
All right, that is a telling story. Let's move on now to Carvana. It's a e-commerce platform for buying and selling cars. Why are you watching this one?
Andrew, this is one of the most fascinating charts you're going to see. It was a darling stock that got up to $350 a share during the COVID era when people were shopping for used cars online at home, because you can go into their website and look at interiors and exteriors of cars, and then basically pick this used car you love, and go to a vending machine somewhere or have them deliver it to you later on. So it's really kind of transformed used car buying. But the thing that's crazy is it dropped, in a massive short attack and a lot of poor earnings and a lot of disappointment after COVID ended. People stopped going to use this during that period, and it would look like the stock was even going to go bankrupt. But now we've got the stock back up at $293 a share with a target price of $328. So it's basically tracking back to those earlier highs, and there is actual earnings surprises quarter on quarter for the last year and a half. So what happened here is, people got overly bearish on Carvana, and when people got back around on finding out that all these tariffs and all these costs on automotive new cars were so high, Carvana got a bid again and all the way back up. So really one of the better stories if you're a momentum trader the last year and a half. At this point, it's still getting 25% annual increases in estimates for this year and 15% next year over the last 60 days again. So again, this is just another story, Andrew, where we're getting, amazing amount of activity away from the news cycle.
John, almost out of time. Just very quickly, look at your third stock, Barclays. It is the UK banking and financial services company. What are you seeing here?
Yeah, Barclays, two parts of this business now, Barclays UK and Barclays International. And, you're looking at a chart that, you could have bought this shares at $8 a share. You could double your money. It's now at, $16 a share, $17 a share. So big step down in the volatility period. Now it's back up and is pricing again in a crazy 60-day period of time, up 10% in estimate revisions for this year and up 7% next year. So again, these three stocks, these are big major stocks. They're very old companies, well-positioned companies. In the last 60 days, their businesses have been improving. So I think, Andrew, the story here is don't, get lost in the populist shuffle here. There really is a lot of activity going on in a positive way in the broader economy.
John, always good to catch up with your perspective. Thanks so much for joining us from Zacks.
You bet, Andrew.
Let's return to the local market. Just before we get going, and we're expecting another positive open there, SPY futures up 0.1%. Stay with us. We're going to get right across that in just a minute or so.